Welcome back to GLXY Grid. As always, I'm your host, Alex Thorne, head of firm-wide research. I'm joined this week by Lucas Chayan, Thaddeus Pinikavich, and Zach Picorni from Galaxy Research. Gentlemen, it is the last week of, that's kind of the last couple days of real work I think we expect anyone to do in this economy. But this might also be our last episode of Galaxy Grid. How's everyone feeling? For the year, I should say. For the year.
Good. Nice little weekend pump to make us happy going into the end of the holidays, end of year. Can't ask for much more than that. Just a full retrace would be nice, I guess, to close everything out.
I'll take a positive Bitcoin return on a year.
I was going to say emphasis on the word little there, Lucas. Little pump, little weekend pump. Hey, this week we're going to talk about Coinbase's system update announcements last week. They announced a bunch of stuff, stock trading, some interesting on-off-ramp stuff, access to the Solana ecosystem, prediction markets things. We'll dive deeper into prediction markets and some of the struggles that the big prediction markets are having. And we'll talk about this Aave Governance fight over ownership of the IP of Aave between the DAO and the labs. And we'll get into all of that. And then we'll also spend some time. Instead of what are we looking at for the week ahead, we will review some of our 26 predictions for 2026 report we put out last week. That will be exciting. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the show notes. Note that none of the information in this show constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into Coinbase. A raft of announcements. I saw some form of stock trading, almost like a Robinhood kind of mix between crypto and stocks. They announced expanded access to the Solana ecosystem, new ways to on and off ramp. And I saw one of the most interesting was the prediction markets. What were people's takes on this Coinbase series of announcements? A very like Apple style announcement, right? Guys talking and mics walking on stages to an audience in a dark room with spotlights on them.
Not quite sure as groundbreaking as the iPhone, but I will take the new kind of Coinbase financial super app. I mean, honestly, it's a pretty good look. Like there's a one-stop shop for prediction markets, stock investing, crypto trading, on and off ramp. Like I can see the usage. I go across 3, 4 protocols, apps, platforms right now to do all that. So getting under one house is useful. But prediction markets are just the hottest new thing now. Everyone's going to have one. I'm not sure, there's going to be real value add there versus poly market. Is there really going to be more information coming out of there, or just another place to trade around? I think probably a bit more of the latter, but I'll probably be using it.
Yeah, I think for me, the two things that really stood out was one, the Solana access. Now, and just one thing about this Coinbase in general, most of these announcements had already been released. Like going into the event, there's all these prediction markets about like what crazy new things they might announce. The big one was like, are they going to announce the base token? And that notably was not part of the event. But the Solana announcement they made actually at like Breakpoint a few weeks ago, and I do think it's notable that even though Coinbase has their own base ecosystem, it's definitely a testament to like most of the organic like trading and user activity, I think continues to be on Solana. And that's why they continue to kind of try and figure out ways to link the two ecosystems. We talked about it a little bit. They acquired a trading app called Vector, I think last month as well, to improve kind of the user experience for users trading on Solana. You definitely see a lot of vitriol between the two communities, though, which the tribalism continues. There's been a lot of sparring on the timeline, each side accusing the other of trying to vamp them. The other announcement that I thought was interesting was the AI announcement that they made, and they basically have this new AI advisor that they're rolling out in the app. And what's interesting here is because they're going to have stocks, crypto, and prediction markets all on one platform, the examples they gave are basically like using this AI assistant to figure out which asset class is almost like mispriced relative to the others to figure out where there's an edge. So maybe you want to bet on commodities, but maybe the better way to do that instead of actually buying a commodity is to, look at the prediction market, which has like some sort of alpha or underpriced prediction. So I'm excited to see how that rolls out. Coinbase and base ecosystem is definitely making a big push into the AI side of things.
Yeah, I think the prediction market stuff is not too much of a surprise. They were like kind of teasing it with like the December 17th or whatever date they announced all this stuff on for a while. But do you guys know if they're using like Kalshi or Polymarket on the back end, or is it just like their whole own sort of individual prediction market? Did they say?
I don't think they made, no, they did not indicate in the announcement which one was on the back end, which leads me to believe they're probably doing their own thing there.
I
Yeah.
thought that it was Kalshi.
Oh,
Yeah, Coinbase joins with Kalshi to enter surging prediction market race business. This was from the Wall Street Journal, so we'll trust it for now. I had heard that it was Kalshi, I think, on another podcast, and so actually, if that's true, like kind of interesting that it's not Polymarket, right?
There just seems to be a lot of like CeFi oriented groups like Robinhood and now Coinbase relying on Kalshi for one reason or another, whatever that might be. But I think it's like good to see them relying on an existing market and not trying to spin up their own and compete and just kind of fight for a piece of the pie. I think what we want to see is groups integrating Polymarket, Kalshi, whatever they think is best on the back end to kind of drive all the liquidity and activity to one or two venues versus having like 40 of them split across and kind of fighting for the market. So, I mean, I think that's a good indication coming out of this is people are relying on existing infrastructure for prediction markets instead of trying to reinvent the wheel themselves. Just kind of feed off of the momentum that exists and see what happens.
Yeah, I would guess that it's maybe Kalshi has just built better APIs and white label third party access points than Polymarket, and that is probably what it came down to, in my opinion. Since they aren't really primarily on chain, that's probably they focused a lot there.
Yeah, we
That would
also
be my
saw with
guess.
DFlow. Yeah, with DFlow now, they're kind of like tokenizing Kalshi positions. So there's a way to kind of make that stuff composable on chain now as well. So you're not making that trade off as much.
All right, let's continue talking about prediction markets because one of the most interesting things is that Polymarket and Kalshi, they're suing preemptively a bunch of states in order to get rulings that their offering of certain contracts does not violate state gambling laws or is superseded, I should say, by federal derivatives regulation. Of course, they're regulated by the CFTC, and it's kind of this battle between whether gambling or prediction markets, event contracts is a Celtics to win tonight. Yes, no. Is that sports gambling or is that an event contract? I think if it's sports gambling, it would be regulated by most state regimes. But if it's an event contract, then it would be a financial derivative that's regulated by the CFTC. What an interesting fight here. And none of us, I should say, on the call are lawyers. So this is all sort of reactions and speculation. But like, what do people think this is going to land? Or what are your takeaways about this clash between a very sort of, prediction markets existed long before crypto, but in this current instantiation, very crypto native fight against an incredibly entrenched opponent, which is, state gambling commissions all over the country.
That's a tough fight. I mean, the Nevada State Commission is huge there with sports and sports gambling. That's a big entity to take on. I don't know. It is a real kind of fine line between what is actually, investing, gambling, and actually just kind of an event contract here. It's going to be a weird gray area. I mean, I put a line in the sand on my 2026 predictions that I think there's going to be a federal investigation off of one of the prediction markets, based off of sports rigging and gambling. I think it's just kind of the surface area here is getting so large that it's going to have to be addressed one way or another, whether it's through the regulators here or someone coming down with the axe on someone that pushed the market a little too early on the basketball game.
What about like high frequency like data for finding out the outcome of events faster? I feel like the sports games maybe people already do this. I guess probably people with a lot of money in the line have someone on the phone probably sitting at the game so they don't have to wait for the stream, but like finding out the outcome of an event faster, like and hypercharging the outcome, the
Yeah.
outcome knowledge.
Flash
Surely
Boys,
that's gonna
Flash
happen.
Boys 3.0 with sports. Yeah, they laid the
Yeah,
fiber
like
lines. They did the stuff between the IZ. They put up the big microwave towers, because that was faster than going underground with fiber. Like, the difference is you got all these different stadiums. There's not necessarily the same infrastructure. Maybe there's better routes. Maybe there's some microwave towers that can be installed. Like you might be an interesting race here for speed now that there's a more widely addressable market that people can trade on. I think it's going to be interesting to watch for. We've been looking at stuff like Double Zero does like some extra internet routing, looking if they can get faster routes from these locations where games are having to kind of major trading centers and getting stuff on chain. It could be a pretty interesting race going forward here.
I mean, the mechanism could be more efficient or whatever, but like it still doesn't change the contents of what's happening, which is kind of like predicting the outcome of sports games, like we could call it. But yeah, I mean, I think it's going to be a tough battle for them, and I mean, I think we could even see a world where the online casinos and whatnot actually implement prediction markets themselves. So it could turn into like if you can't beat them, join them type thing, depending on what the legal outcome is. But I think it's kind of anybody's guess at this point. But I also would not be surprised to see like DraftKings prediction markets over the next year or two, if this stuff remains sticky and becomes a solid way to make money.
Yeah, agreed. I mean, I think two things is one, like this is the nature of crypto. Wherever there's regulatory arbitrage, like every company does their best to exploit that regulatory arbitrage, and like that's a moat for getting users and traction early on. And second off, like the other thing that we see with crypto is every time we find a successful product, it tends to cannibalize itself in that if it gets adoption by existing incumbents, whether that's in TradFi or gambling apps or just large companies that already have distribution among non-crypto users, they're going to leverage the advantages and innovations that those products introduce and adopt them themselves. And because they have distribution, it actually makes it sometimes harder for the companies that introduce that innovation to succeed.
Yeah, and you could imagine too that they get banned from offering sports related prediction markets, but that the elections, the mention markets, the economic indicator markets, the crypto or other stock price prediction markets might live on, right? And then because I don't think while prediction market operators are sort of arguing they have the ability to offer all of these, sports gambling books are not arguing they have the ability to offer those other more native prediction market ones. So a bifurcation, if not an amalgamation, perhaps a bifurcation. I think something either they win and take it all over, or they get put in their boxes and they play nicely next to each other. I feel like is the outcome. All right,
I wonder how far we'll push the definition of sports. I've seen some things on there that's who can cut the item in half the best and weigh it equally. Like there's some interesting sports to gamble on out there. So it'll be fun to see kind of where the line gets drawn.
That's an actual game show. That is who can cut
great.
Yeah. Is that like a German? It's like a German game show or something, right?
It's some fantastic German game show where they're like cutting pretzels in half and trying to get it exactly 50-50 weight wise.
Will also be interesting to see how the like national sports leagues in particular, or the NCAA weigh in on this, because they're all quite involved at this point. You can't watch a national football league game or NBA game without seeing ads for DraftKings or one of the other sports books, MGM or whatever, Caesars. They've all frankly adopted it. ESPN, like during their like pregame shows, like shows you what the lines are, right? Like, did they have some vested interest in defending the existing sports gambling status quo, or even the fintechs of sports gambling? I'll call them the apps, versus the prediction markets. Like, who exactly are the prediction markets taking on in this fight? It's not entirely clear who's on which side. So definitely more to see there. Let's go to the last story. Aave conducting a governance vote. I saw the snapshot is now live, with token holders deciding what exactly to take the IP from Aave Labs and put it in the DAO. Is that, and by IP, what does that also mean? Maybe Zach, you can give us the TLDR on this story.
Yeah, I mean, this is kind of an interesting one because, I mean, just the question of like, what does the token get you, and how is it related to the company or organization that sits behind? The product has been like a big open question that people have really started prodding on recently. In the Aave case, it's just sort of a battle over the IP. So like the Aave.com, Aave front end, like naming rights and all of that stuff. Like what we've seen over these last few crypto native acquisitions from CFIs is the CFI comes in, they buy the IP and like the code base and technology behind it, and then like so technically like the off-chain assets, and then the token is kind of left as an afterthought because like oh it was just here to sort of like govern the protocol. The token never actually had an economic claim or any tie to the things that these companies were actually acquiring. So obviously like everybody now is like asking the question of like oh like if this happens to me then like what is my token worth. And the whole thing that kind of sparked this debate was Aave Labs redirecting a bunch of fees away from the DAO towards their own wallet. um, and that just kind of cascaded into what we have today, where now the DAO is requesting that all the off-chain assets and the IP and all that stuff goes to a like a DAO aligned or some kind of DAO connected organization that keeps token holders protected in the event somebody comes in and acquires like Aave.com or the developer team behind Aave Labs or Avara or whatever it might be. But yeah, it's kind of crazy. The process is moving very quick. This kind of just started like beginning of last week, and now there's already a snapshot vote that everybody's going to start voting on at 9:40 tonight, December 22nd. So it'll be interesting to see what happens. I mean, it's just kind of crazy that this is happening with arguably the largest DAO in all of crypto, and one that is actually making a ton of money. Like Aave DAO makes over $100 million a year. So it's not like the DAO is like economically depleted. Like it makes plenty of money, and that's kind of what makes this whole situation unique. But yeah, I think it's anybody's guess on what will actually end up happening.
So
Yeah.
does Aave plan on doing something like Uniswap's like Duna architecture? Or are they going to take the IP and create a proper legal structure there that kind of recognizes the DAO as like a agent owner, or or are they just trying to get the IP back and kind of tackle that afterwards?
Yeah, I mean, there's been like no mention again. This has been like a 5 or a 6 day conversation so far. Like to the extent that they've said that it's just like a neutral legal wrapper that's aligned with the DAO. Um, and yeah, this like kind of all sparked from like a fee redirection and not so much as like an inquiry for acquisition or anything like that. So I mean, the conversation is still very early on, and it's kind of crazy that they're already going to a vote on it. Um, but yeah.
Yeah. I mean, it's an interesting one. I mean, the ones we've seen so far have been like almost all the equity just completely winning out over token holders. A lot of the times, though, I mean, I think with the recent ones we've seen with like Axlar, though, it's like it's proper like merger style numbers, though, where it's like, okay, all the equity holders are essentially getting bought out, and an arm's length token agreement is just forgotten. It seems a little less severe, though. So you think like this might actually end up amicably? There might be some sort of agreement between labs and the DAO, or is this going to be a head-to-head fight between equity and token holders the course of the week?
Yeah, I mean it's crazy how like just because of the way all these tokens had to be launched years ago, we've like gotten ourselves into these huge like debates and ongoing arguments and like legal conundrums over like how they incorporate with projects that on the surface are immensely successful, and where tokens were meant to simplify things are really complicating things right now. But I think token price is a good prediction market in of itself, and just go look at the Aave token price. I think to see kind of how some of the big holders might be feeling about this proposal. Although it's not perfect just because it's correlated with the broader market. But the other thing I think here is like, Zach, what does this do in terms of kind of how nimble and fast moving Aave can be? Because obviously, while the DAO deserves to be compensated, the independence that Aave Labs has, I think, has been a big advantage for them being able to retain market share. They've got all these new initiatives, things like Horizons, right? Like that's very focused on kind of the institutional RWA side of things. And if everything's under a DAO, does that complicate for getting kind of that institutional adoption?
I mean, that's like the argument for the people who say like nothing should change have been making. It's like part of why Aave's been successful is because they have like the protocol DAO governance side and then like the development commercialization side in Aave Labs, and you just had essentially two entities specializing in one thing and being quite good at it. But again, like we're kind of going through a regime where the token holders want to have full control over all of the assets of the organization that they're governing. And if Aave gets so big to the point where they get acquired, like there's a chance that some of the more valuable assets are left out and token holders are kind of still left holding the bag. But yeah, that's kind of like the unique thing with Aave is like we saw this kind of similar situation with like Uniswap DAO and Uniswap Labs, where it might have been a bigger deal for that arrangement because the DAO actually didn't make enough money, or a bunch of money, just given the nature of the DEX business, with most of the revenue going to LPs. Like, it's kind of the opposite in this case. Like, the DAO prints a ton of money, 100 million plus a year. But nonetheless, like, there is, or there could be, a lot of value in the IP and other assets that might be acquired. So the token holders want to make sure they have all their bases covered in the event that there's an acquisition, or just not letting anybody have like universal control over those assets, even outside of the realm of like acquisitions and stuff.
It seems like they definitely would face the need to create some kind of like, whatever Maker, now Sky, had done with their pods or whatever they were called, like in order to even have a chance at developing at a pace that or managing the development at a pace that would meet the market, in the case that it's all in the DAO. Also, what happens to Aave Labs if all the IP and ownership and equity value is moved to the DAO? Does it continue on as a development company or something?
I think that's part of the question here about how the equitable is the split and the resolution.
Yeah, because
I
it's
honestly
like,
think this is pretty.
the token holders are worried about getting wiped out in the case of an acquisition, or left aside at arm's length. But are they on the verge of wiping out the equity? If they do.
I mean, I think there is I think people in Aave Labs, like I talked to two people, are like a little nervous about this and how it impacts them, because they do feel like, all right, well, suddenly all of the kind of the stability that we've had might go away, and we're not sure this is the most optimal way to be governed. But like, I also think for those people who have been advocating for more exciting DAO governance, 2025 has been an excellent year for that. But I do think it's hilarious that this vote is going to be happening over the holidays, when there's probably like the least amount of people that will be paying attention to it. So I am interested to see what the participation is going to be in this type of vote. I saw, like, I think one of the biggest stakers of Aave that had delegated their stake to somebody who is against against the proposal. Sorry. Had unstaked. So I mean, I'm interested to see kind of like where this all falls out and what participation is like for the vote going forward.
A bunch of folks from the DAO side are saying like abstain, or vote no, saying like there's not enough detail, and that like Stani just essentially like copy pasted their like original ARFC. So I mean, there's just like a ton of drama. And it's kind of like happening in a bunch of different places, in like the Aave Governance forum and just in like threaded comments on Twitter. So keeping up with it's been a bit hectic, but yeah, I guess we'll see.
What's at stake here, right? Like, Aave's the biggest lending market in all of crypto.
I think it's more than just Aave. I think it's the proper like adult business of crypto being done now. This is a real business making real money, and I think this is going to be a good impetus to move away from, white papers to contractual agreements with your token holding. Real defined ownership, not arm's length agreements. It won't be tumultuous. I think it's a sign of the times that there's real things to fight over here, and it's going to lead to obviously an interesting evolution in what real ownership looks like on chain, what rights you actually do and don't have, and a kind of progression to real serious business instead of just printing tokens out of the air like some projects want to do.
All right, with that, we only have about 10 minutes left. Let's get to our 26 predictions. I'm going to ask each person here on the call is going to give maybe two, maybe max, of ones that they publish. But of course, go to galaxy.com/research to read the entire report. There are also predictions from others on our team who are not on this call, like Will Owens and Mark Hochstein and Jianing Wu and Christopher Rosa, which are also interesting, but they're not here, so theirs aren't getting read. Lucas, kick it off, man. You start us off with two of your predictions for this next upcoming year.
Okay, yeah, sure. So I think the first one is basically that I think we're entering kind of a new phase for general purpose L1 chains. And instead of kind of being these fully neutral pipes that activity happens on, some chains are starting to realize they need to really bake real revenue generating apps directly into the protocol so that value flows back to the token. And so I basically have one prediction saying that at least one live general purpose L1 blockchain will enshrine a revenue generating application to funnel value back to its native token. And, I think probably that's going to be some of these less successful layer one chains that are trying to kind of really get a lot more adoption, and also whose token prices have been down only, but have kind of pivoted, whether that's into AI or into being kind of like an intense purpose chain. I also think this will be very interesting, because I think the actual process of having to kind of like shift from being a neutral layer to a more opinionated one with enshrinement is going to be a very complicated and divisive one. It has huge implications for ecosystem teams that have been developing on these chains for a very long time. So that was my first one.
Wait, so
and then
wait, just to be clear, you're saying not instead of, but as an alternative to simply being a blockchain upon which developers can release DeFi apps or dApps, they'll not just release them themselves, but make it native functionality of the protocol. So what, like swapping or lending or something like that?
Something like that.
Tokenization will be
Yep.
You won't build it. There'll be a layer one wide standard.
Yeah, and it can happen many ways. It could be they build it themselves. I mean, another interesting way is they decide to acquire one of the teams that's already built on the protocol and integrate that in. But I think the real kind of like driver of this is that teams are figuring out, as we've just discussed with Aave, like what does the token represent and how does it have value? And this is one way that protocols can do it. And I think the success of Hyperliquid, and what we're seeing in terms of, we saw Stripe, right? They've got all of these opinionated things on how to do payments and how that might, if they release a token, eventually flow back to the token. And I think that's going to spur more activity across existing chains as well.
All right. What's your next one? We got to keep these tight, so I'll stop bothering and asking questions. You're good.
The other one is on Base, or no, X402, which is an agentic payment standard. I've got a piece out, should be out the first week of January on this, quick plug. But basically, I'm predicting that the percentage of transactions that are driven by X402 on Solana and Base are going to rise dramatically. So I think on Base, we saw it got up to, I think, 20%. I'm saying it should reach about 30%. And I think on Solana, I'm predicting that it'll get up to about 5% of non-vote transactions. And just my general view here is X402, these agentic payment standards, is a really good way for crypto apps to gain adoption without the user on the other end or the merchant that's selling actually knowing that they're using crypto. And that's going to drive a lot of use over them for the coming year.
All right. Zach, you're up.
Yeah. First one on lending markets, I think we'll see outstanding loans against crypto rise above 90 billion. So we hit like an all-time high of 73 billion in Q3 of this year. We'll see what the Q4 numbers are in January. But yeah, I mean, I think regardless of if the boringness and the stagnation in the market kind of continues, I still think we're going to see crypto-backed lending continue to rise. In a bear market scenario, I expect CeFi to be the catalyst here. And then obviously in a bull market, I think it'll just be tough for the CeFis to keep pace with all the synthetic assets and yield generating opportunities that come with on-chain lending. But yeah, in either event, bull or bear, I could definitely see crypto-backed lending rise above 90, get closer to 100 billion. And then on like the more DeFi-centric side, I think we'll see Futarchy DAOs reach treasury value over 500 million. Right now, it's around 46 million. And these are DAOs who just purely use Futarchy as a governance mechanism. So no token weighted voting. Like we will eventually see with this Aave vote. These DAOs use markets to make decisions. So yeah, I think we'll see a good 10x in the treasury value of these organizations over the next year.
All right, Thaddeus.
All right, stablecoin world domination. Stablecoin transaction volume to overtake ACH transaction volume this year. It's already over Visa. You're seeing massive transaction volume, and with Genius being essentially solidified, the rules being set in stone, we're going to see some real serious flows from the institutions, whether that's Genius compliant or things that have the carve outs. We've already seen some stable coins launched this year. USD1, it's already several $1 billion. We're just seeing a lot of growth. I mean, we've had continued 30 to 40% CAGR, like cumulative annual growth rate in stable coins, but I think the Genius Act is really gonna kick that off. A lot of models you see around the world, whether it's just from native growth or just supporting transactions, require just a lot more stable coins to support that transaction volume. So I think it's going to be close, but I think we're going to get close to edging over the ACH volume this year, and it's you're really going to start to see it eaten into kind of bank business more. And speaking of bank business, the second one is that a major bank or broker will accept tokenized equities as collateral. This has been something that we've been hoping for here at GLXY. We do a lot on chain and off chain. We tokenize our own stock, but we've seen some real serious action from kind of highly regulated entities like the DTCC. Just recently announced a partnership with Canton Network to get some of their securities on chain, and we're just one step away from a broker accepting on a public chain tokenized equities. You have it on private chains right now with like JPM's Kinexus. But I think this year we'll see the rails open up to the kind of public chains, and you'll be able to go direct from Ethereum to your iBroker or your Fidelity account with your tokenized GLXY or Aave.
And by the way, I'd like to see that also for native digital assets, bringing in your Bitcoin, your ETH, whatever you want, bringing it out, bringing it in.
We're getting there. That one's happening with the CFTC is allowing that with some cryptos native settlement these days.
That's right, like using tokenized assets as collateral in an FCM and stuff. I'll add to Thad's two of them. One, the SEC will offer some form of exemptive relief that allows tokenized securities to trade inside DeFi under their innovation exemption program. That is on the back of the no action letter that the DTCC received to allow the DTCC to tokenize some of their ledgered deposited securities and allow their participants to hold them in a blockchain format. But that is not this. There's no indication or relief given to the DTCC to let individuals hold those tokens or to let those tokens flow into the broader on-chain environment. As of now, I think that's probably an important foundation layer, what the DTCC has been allowed to do, but is not about tokenizing securities into DeFi and letting them flow on chain in different ways. I think you will see a letter like that from the SEC. And as a corollary and a second prediction, I think they'll get sued over it. I think they'll be sued by either a big securities industry trade group or perhaps a big securities industry market participant that argues they should do comprehensive rulemaking and not these exemptives reliefs. And I talked about this ad nauseum at the SEC's Investor Advisory Committee meeting on December 5th. So if you want, go see that. It's on YouTube, or it's also on my X page, x.com page. One last one, which I won't get into before we wrap. I did predict that Bitcoin would hit 250K by the end of 2027. But I frankly find 2026's investing environment too chaotic to offer a specific number, though I did say it is possible we hit new all-time highs in 26. If you want to read that, my reasoning and all of these, the reasoning behind all these other predictions and all the other ones you didn't hear, all 26 of them, make sure you go to galaxy.com/research. Everyone have a very happy holiday. And I'm not sure if we'll see you next week. We're going to have to roll the dice on that one. Maybe we should open a prediction market. But in any case, thank you, Lucas, Thaddeus, and Zach, and everyone have a safe and happy week.
Thank you very much.
Thank you. Enjoy the year of the horse.